Good morning, everybody. Welcome back to Strongman Personal Finance. I had a great night's sleep. I traveled. All I did was drive everywhere and fly everywhere for the last 7 freaking days. And now I'm finally home and I'm feeling delicious, superstitious. That's right. I slept like 10 hours last night. So, of course, my coffee smells like it tastes like perfume. Of course, we need to talk about Alibaba today, because the stock just got freaking annihilated on the most recent earnings report. And I want to explain something to you, okay? When you buy a stock for the long term, you do your due diligence, you find your buy point that will give you your required rate of return based on reasonable assumptions, and then you just hold the stock for 5, 10, 15, 20 years, okay? And if you don't like that, then you can just go ahead and buy a total world index fund in a tax advantage account. There's nothing wrong with that. You don't have to buy individual stocks. You don't have to buy Alibaba. You don't have to buy that stock, okay? I chose to buy it with a small percentage of my portfolio. I have about $8,000, $9,000 cost basis in Alibaba. It's a small fraction of my portfolio. The vast majority of my portfolio is in the VT ETF, the Vanguard Total World Stock Market Index ETF. It's a great ETF. You can go check it out, but you make your own decisions. So let's go check out Alibaba and let's see what happened. So let me share my screen here. Woo, hopefully I don't look like crap. So here's Alibaba. Now, as you can see, looking down here, you get your laughs out, you tattooed chef shills. I'm down $1,400. I'm down 27% on Alibaba. I have a cost basis in Robinhood of $208. I have another $3 or $4 grand in my Roth IRA and in my Fidelity account. So I roughly have about $4,500 or $8,000 or $9,000 invested into Alibaba, but it's still a small part of my portfolio. Now, Baba went down 4%, looks like today, and then it's down 6.5% after hours. So that's a total of 10%, 10.5% down. So it's getting freaking hammered, okay? And then if you look over the last year, the stock's down 41%. Now, China has been getting freaking annihilated recently. You know, there's all these tech crackdowns. People are worried about that. Evergrande, blah, 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 blah. Jack Ma saying stupid crap. Like, everything that could possibly be wrong and that could possibly produce negative sentiment for a stock like Alibaba is happening. However, I don't give a crap, okay? That's the whole lesson I'm trying to teach you. You don't have to track your stock every single day. But I'm doing this video to kind of iterate this point that the stock is still a great freaking deal, okay? Assuming that you believe that we're not going to delist Alibaba and blah, blah, blah. If you want to learn more about that, because there are some risks, you can go to Capital Mindset. That's a channel people I had on my channel. You can go to them, and they may actually made a video about the risks associated with buying a Alibaba, because it's actually a shell company. You don't actually own the company. Some people aren't worried about it, like me. Some people are, like Capital Mindset. You can go watch them to get an alternative perspective. But if you're bullish long-term on this stock, this is just another buying opportunity, okay? As long as you keep it to a small part of your portfolio. So that's what happened to Alibaba. I'm sure there's going to be clowns. Oh, you're so stupid. But let's go look at some of the earnings. So I haven't pulled up the 10Q or whatever they call foreign 10Qs. I haven't looked at that, but we can just use this article as a proxy. So Alibaba on Thursday today missed revenue and earnings expectations for the September quarter as slowing economic growth in China weighed on results, okay, adding to regulatory headwinds. So you have an economic slowdown, which I think is temporary, and then you have regulatory headwinds. That's the Chinese government cracking down on Alibaba because they're becoming too powerful, basically, which I think is another temporary issue, okay? Temporary short-term sentiment. Negative temporary short-term sentiment. You don't need to worry about that. If you're worried about stock prices, then you need to buy index funds. All right. Here's how Alibaba did in its first quarter. So basically they made, let's see. Okay, it looks like did they beat on revenue? No, they missed. So they slightly missed. So they were down. They made 4 billion less won than they expected. 4 billion less won. If you convert that to the currency, I don't think that's a huge miss at all. So slightly down on revenue And earnings per share, they had 11.2 versus a 12.3 estimated, a 38% year-on-year decline. I know sometimes companies have good years and sometimes they don't. But the key is they're actually profitable, unlike a lot of companies that are pumped by other YouTubers. I won't mention names. I bang on them too much. Okay. The company also slashed its revenue guidance for the current fiscal year. It previously expected to bring in 930 billion won, which would have been about 29.5% year-on-year growth. That's pretty high for a company like Alibaba. But it now expects growth to be between only 20% to 23%. Wow, what a disaster. So it's growing 20 to 23% every year, and it's highly profitable. Man, I'm just going to sell all my Alibaba and buy Tattoo Chef now because that's just such a great, profitable company. It's not risky at all. Alibaba shares are down 5%. Now, we can go into a little bit more detail about why this is happening, but of course, it's all based on the economy. Sometimes the overall macro economy affects companies like Alibaba. You can't, that there's a risk that the overall economy affects your company's earnings. So sometimes you can't control that, okay? But in the long run, you want to look at the fundamental business and say, is it growing? What are my expectations? And then you can use that to calculate your buy point. So 10 major banks have trimmed their full-year China GDP forecast as power shortages and efforts to rein in debt-fueled expansion in the real estate sector add to many pressures on growth, such as sluggish consumer spending. Okay. Do you think power shortages are going to be temporary or permanent in China? Do you think debt-fueled expansion in the real estate sector, where they're starting to crack down, is going to be temporary or permanent? Remember, in the United States, we also had a big real estate bubble, okay? And that bursts, and now our stock market's way higher, and our economy's doing okay. I mean, we have inflation or whatever, but okay, all this is temporary, okay? This is not doom and gloom. This is not the end of the freaking world. It's laughable to me that the stock is so cheap based on all fundamental metrics, and then it still sells off by freaking 10% in the last day and a half, basically. Wow, the growth is 20% instead of 23%. This is temporary market stupidity, okay? But if you want a quick gain, if you want to make a quick buck, you shouldn't be touching Alibaba. So I'm on Morningstar. I'm actually trying to access the key ratios, and it's pissing me off because I can't access it. Let me see if I can do it again. But I can actually show you the average profitability over time and the revenue growth and all that, where I can, kind of build my assumptions for you. Let's see if it works. They might be updating it because of the quarter. Okay, whatever. Morningstar still gives it a wide moat. Not that it matters. And they have a fair value of 284. I think it's higher than that, but whatever. Chelsea Tam, thank you for your analysis. So let's go do some 8-pillar analysis, and let's factor in lower profitability, okay? Let's be super conservative and see if this is a good deal or not. So over the last couple of years, we've had revenue growth of 40% over 1 year, and then we've had 44% compounded over the last 5 years. That's pretty significant. Let's say going forward, we have 10%, 15%, and 20%. Yes, I'm not using my tool right now because I can't access the Morningstar data. Profit margin, let's be super conservative, 15, 17, 19. Ultra conservative. This is probably going to be way too conservative, way too bearish. Free cash flow margin, let's go 16, 17, 18. PE, 15, 18, we'll do 15, 17.5, and 20. 15, 17.5, and 20. And desired return, 15% return. Let's see what this gives us. Wow. Look at that. So the only time this stock, and this is outdated. It's actually at 150, isn't it? Yeah, 151. The only time this could be not a buy, in my opinion, to get a 15% return over 5 years is if revenue growth is 10% going forward. The future estimates are 20%, or what they expect is 20% this year. Okay, I don't think it's going to be 10% going forward. Profit margin is lower than basically it's ever been. Free cash flow margin lower than it's ever been. PE of 15 on a company that's growing 20, 25%, probably be a little bit higher than that. Price of free cash flow and a 15% return. At that point, then it would not be a buy. You'd have to wait till it dropped to 110 or whatever. And these are my assumptions, okay? Do your own research. If you want a 10% return, wow, it's almost a buy for a 10% return at the lowest assumptions. Okay. So I think all of these this temporary setbacks, I don't care. I don't give a crap. Okay. Am I going to buy more? Maybe. I mean, I don't want to have too much of a position in Alibaba. I don't like being super concentrated in any one stock, but I might. Maybe I'll throw in 1,000. I don't know, because it just seems like it's, a bunch of BS. Now, my assumption, I think the growth is going to be much higher than that, and the profit margin is going to be higher than that. So it's a screaming buy, in my opinion. But whatever. All right, let's see some comments. I'm hard. I like how you photoshopped your face on there. That's cute. Good morning from Upper Michigan. Keep being in. Why do you live up there? It's cold. Looking sexy, man. I know. See, I can dress like crap and people still watch my channel. I love it. 4 billion won equals $600 million miss, man. Alibaba's just doomed. You guys should sell all your profitable stocks and buy Tattooed Ballsack and Beyond Meat, because it's the future, bro. Not the money printing cash machine. That's Alibaba. Baba's a cash machine. That's true. Tattooed Ballsack sucks. Yeah. Ooh, that food looks delicious. Ooh, is that Indian food? Hello, my friends. What's up, bro? This is a real buy the dip. Yeah, I mean, once you calculate your buy point, I mean, anything below that's a buy, but it's all up to you. I don't think you should have a massive position in Alibaba, but, if you want to buy it, it's not that bad of a deal. NVIDIA is one that destroyed earnings. It's up 9% today. Ooh, I didn't do an NVIDIA video because apparently I hear that's super crazy overvalued. I haven't looked at it, but we'll have to see. Also, check out Macy's for value. It had earnings up 11%, only 6 to 7 P. I'll check out Macy's. I mean, I'm not a huge fan of Macy's. WTF. Ha 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 ha. What's up, Alex? How you doing, bro? What is your cost basis? So my cost basis is $208 in Robin stock. I need to close my Robin stock account. And then I have like 177 in Fidelity, something like that. So I'm still down, but I don't give a crap. I think I bought a great company at a great price. Do you know why Everything Money took out shares buyback from their stock analyzer? No. I mean, maybe because their math is wrong, but you can still like using my tool that I made, which is totally not a ripoff of theirs. You can actually calculate the change in shares year over year, and then you can plug those into your assumptions. So that's the flaw with their tools. You don't have the raw data to manipulate. Whereas like with the thing that I use, it's kind of like theirs where, you input the numbers, but I actually take the data from Morningstar, I paste it into a tab, and then I can actually look at the data and manipulate stuff if I need to get the numbers that I think are accurate. I don't know why they did that. But no, I'm not giving out the cheat, okay? Because they'll freaking sue me probably. At least they showed up and seemed like the right numbers, unlike Tattooed Ballsack. That's right. See, like, I don't understand why people are so into Tattooed Chef. It's like a cult, okay? The stock could go up. It could be a 10x banger. Anything could be, but is it worth risking your future on a stock like that? It's ridiculous. I'll wait till it drops again or lower. Yeah, you can buy whenever you want. I think it's a good deal now, but no problem waiting. If the EM software, I prefer to adjust in the low, leave all the other metrics relatively fat. Yeah, the main issue with the EM software, Everything Money, is that if the stock has a crazy quarter or crazy last year, let's say that they have a temporary massive spike in revenue, earnings, whatever, it uses the last 12 months revenue, from my understanding, to go forward. So you're calculating off a spike in revenue. So your future assumptions may be overstated. So just keep that in mind when you're using the software. That's why the software is great, but you need to be mindful. Make sure you're not putting the wrong freaking numbers in there to screw up your analysis. I'll keep buying for sure. If you don't, leave my channel. Oh, by the way, if you haven't already, you better like the freaking video and subscribe to my channel and give me all your money. Buy my book. How can I get this tool strong, man? I don't know. Maybe I'll email Everything Money, be like, hey, you're going to sue me if I, share this. They probably would. They took it out because they're counting free cash flow twice in the way that they calculated buybacks. Oh, okay. Any thoughts on Intel or Norton? I like Intel. I would buy Intel at like 42. This is for me personally. This is my analysis. I would buy probably Intel at 42. Norton, I haven't looked at that. I have no idea. Buy. Everything's a buy, bro. Just buy everything. Looking forward to my big breakfast. Tyrone. What's up, Tyrone? What are you having for breakfast? Yeah, you are right. Yeah, they would sue me. Okay, that's it. Unless you have any further questions, I'm gonna make another video. I think I'm gonna do NVIDIA later. But for now, I'm gonna go use the bathroom, and then maybe I'll come right back. Oh, last comment. What do you say at the end of video, strong man? Cheese. Open Bob will turn my stock into a rental property. Oh, in rental property in 7 years. Oh, I'm not understanding that. I wonder when evaluation will matter again. Never. Valuations don't matter, everybody. It's the future, bro. Just buy the most unprofitable trash companies as long as they're futuristic. This has never happened in human history, in stock market history, where just buy it, bro. It doesn't matter, bro. It's the future, bro. And everybody, it's gonna go on forever and ever. Yeah, you think this is gonna last forever? It's a freaking joke. Okay, I hate this market. I used to not care about the stock market. I used to be in the Army. I would put a lot of money into my thrift savings plan, my retirement account, and I would just go do Army stuff. And then I would go on the weekends, I'd go to the bars and drink and have a good time. I didn't worry about stocks. And guess what? I still saved a lot of money because I just tried to max my tax advantage accounts. But now it's like, I have to deal with this stupidity. Oh, TTCF. Daddy pal. Yep. Dude, you owe us a big, delicious eBay video. All right, I'll do eBay. God, so many stocks. Okay, I just got back from vacation, everybody. How did you meet Jay Nagy? He commented on one of my videos. And when I was making fun of Tesla, and this was when Tesla was way lower, and I was dumping on Tesla. And of course, Tesla went up because it's the future, bro. But that's how I met him. No, I met him down at the truck stop. Anyway, that's it. Subscribe, like the video, subscribe, please. And I'll talk to y'all in a little bit. Cheers.